India's industrial sector has started the new financial year on a strong note. The latest Index of Industrial Production, or IIP, released by the National Statistics Office shows industrial output growing by 4.9% in April 2026. The growth was driven by strong performance in manufacturing, capital goods, automobiles, and infrastructure-related industries. Even more importantly, this is the first IIP release based on the new 2022-23 base year, giving a more accurate picture of India's evolving economy. So what is driving this growth, and what does it tell us about the broader economic outlook? Let's break down the numbers. India's industrial economy has just received its biggest statistical upgrade in more than a decade. The government has launched a completely new industrial production index with a new base year of 2022-23. At the same time, industrial production grew by 4.9% in April 2026. Manufacturing is expanding, businesses are investing, and several industries are posting strong double-digit growth. But beneath the positive headlines, mining output has contracted, consumer demand is moderate, and global risks are rising. So is India's industrial engine accelerating, or are warning signs beginning to emerge? Let's break down the numbers. The Index of Industrial Production, or IIP, is one of India's most important economic indicators. It measures industrial activity across manufacturing, mining, electricity, gas supply, water supply, and waste management. Think of it as a monthly health report for India's factories and industries. When IIP rises, factories are producing more. When IIP falls, industrial activity is slowing down. And according to the latest data, India's industrial sector is still moving forward. The biggest story is not just the growth rate. It is the complete modernization of how India measures its industry. The base year has been updated from 2011-12 to 2022-23. The product basket has expanded from 407 item groups to 463. New modern products like CCTV cameras, aircraft components, and advanced medical devices have been added. The goal is simple: measure today's economy using today's industries. India's industrial production grew by 4.9% in April 2026. The overall index rose from 113.4 to 118.9. For a big economy like India, this is healthy and resilient growth, especially amid global uncertainty. The industrial engine is still moving forward. Manufacturing expanded by 6.2%. Water supply and waste management grew by 6.6%. Electricity and gas supply increased by 4.9%. However, mining and quarrying contracted by 5.1%. The overall picture is positive, but growth is not uniform across every sector. Capital goods production surged by 16%. This category includes machinery, factory equipment, and production systems. Businesses buy new machinery only when they are confident about future growth. That is why economists watch capital goods closely. This strong jump signals that India's investment cycle is alive and businesses are preparing for expansion. Several industries delivered outstanding performances. Electrical equipment grew by 19.2%. Other transport equipment surged by 18.9%. Textiles expanded by 15.6%. Machinery and equipment increased by 12.9%. Motor vehicles grew by 12.7%. These sectors are powering India's industrial momentum. Vehicle production increased by 12.7%. This matters because the automobile industry supports steel, electronics, rubber, logistics, and thousands of small businesses. When auto production rises, the benefits ripple across the entire economy. One of the strongest positive signals in the report. Infrastructure and construction goods grew by 7.1%. This reflects continued spending on roads, railways, power systems, and industrial projects. Strong growth in electrical equipment also shows ongoing investment in energy infrastructure. Infrastructure continues to be a major driver of India's industrial growth. Mining and quarrying output declined by 5.1%. This is important because mining supplies raw materials to almost every manufacturing industry. If this weakness continues, it could create supply constraints later. For now, manufacturing is strong enough to offset it, but it is a trend worth watching closely. Consumer durables grew by 4.3%. Consumer non-durables increased by only 2.8%. These numbers are positive, but they do not show a big consumption boom. Right now, industrial growth is being driven more by investment in infrastructure than by household spending. Some sectors are still struggling. Wood products declined by 12.5%. Beverages fell by 7.1%. Wearing apparel contracted by 7%. Furniture production decreased by 2.2%. Growth is strong in some areas, but not yet broad-based across every sector. The IIP methodology has changed significantly. New base year, revised weights, new products, and expanded coverage. That means comparisons with older data should be made carefully. Some differences may reflect better measurement rather than actual economic changes. Positive signals are clear. Manufacturing is healthy. Business investment is rising. Infrastructure spending remains strong. Capital goods jumped 16%, a big vote of confidence. However, mining weakness and moderate consumer demand show that growth is not yet fully broad-based. India's economy is moving forward, but some parts are moving faster than others. India's industrial engine is gaining momentum. Manufacturing grew by 6.2%, capital goods surged 16%, auto production rose 12.7%, and infrastructure goods expanded 7.1%. However, some caution signals remain. Consumer demand is still moderate, mining activity remains weak, and export conditions continue to face uncertainty. At the same time, global risks cannot be ignored. Middle East geopolitical tensions, oil price volatility, supply chain disruptions, and the possibility of a broader global slowdown could create fresh headwinds. For now, the data tells a positive story. India's industrial recovery remains intact, but sustaining this momentum will depend on stronger domestic demand and a stable global environment. Thank you for watching. Follow at Golden Rule 16 for more simple, crystal clear updates on India's economy.